Hi everyone. So 2 weeks have passed. Welcome to another market talk, and I'm sure this talk will be interesting not only because of what happened in the markets, but also because next week is a very important week because it's not only the rollover week in equities futures, which is always a best week to take a vacation off because nothing good happens during rollover, but also we have a very important Fed meeting, so I'm sure we have a lot to talk about, and maybe start with Ted. Ted, what's going on? What you see in the markets?
So I'm getting some delay.
Can you hear me?
Yes.
Mm.
Yeah, so I just had a lot of feedback. I'm back on the program here. I apologize. But let me I'm getting a lot of delay.
You want me to take over?
I'm gonna log in and log out.
Okay.
So maybe Raphael, what do you see? I know that you are not bearish, so interesting to see what you have to say.
Yeah. So what happened since 2 weeks ago? So I got stopped out on my swings long equities. I had to stop at break even, so no loss, good there. I was expecting a buy on my system. It didn't trigger, but something else triggered. So I'm gonna go through everything. The positions I took are long ES at 5420. I took this position yesterday on the sell-off we had on the release. I added to gold. So I think it was a week and a half ago, 2 weeks ago. I unloaded 2/3 of my long position that I took at 2,430, and I added another 2/3 at 2,520. So last week, I bought some silver at 28. I considered very heavily buying Bitcoin, but didn't. So I'm going to go through everything, and I'm going to explain the rationale I have. So give me a sec. I'm going to share my screen. Okay, you see?
Yeah.
Okay, good. So I'm starting with NQ as usual. So the game plan was, so I didn't erase the arrows I did 2 weeks ago. The game plan was that we would get a sell-off that would be bought for the next leg up. So I noticed several stuff that happened during the sell-off. The first thing was that basically we had several clues that we were not going to face a crash like many people were talking about on Twitter. Many forums were very crashy, but unfortunately for them, a lot of clues did not agree with them. So the first clue was, so for the people using my matrix indicator, you can go to my TradingView profile and scripts, you will find this one. So the blue here is when volatility is quite elevated. So it usually happens when you have a sell-off, and this sell-off is brutal. And you can see that when we had the previous sell-off, volatility was quite high. So you can see in blue. And what happened during the sell-off that we had is you did not have that. So the volatility was actually quite contained, contrary to what you would have believed seeing what you were seeing on Twitter. Also, another thing that happened was volatility actually started to make lower high. So we got confirmation on Wednesday that volatility was actually starting to top and to go back down. Another thing that I saw was also my momentum on matrix was starting to shift. So red is negative momentum, green is positive momentum. So this momentum was also starting to move. Another clue also was the fact that the bottom of the range on MFR stabilized. So you can see here, it stopped going lower and it was basically flat. One last clue also that we saw was, one other clue that we saw, sorry, was the fact that ES, here, I'm going to show you. So ES and NQ actually exhibiting the same stuff. You can see, you will see matrix, you will see vola. Both of them were exhibiting the same stuff. So you can see here, lower high on vol. Now we are doing lower low. You can see here matrix, etc. ES was actually unable to break trend. So, I mean, if you are expecting a crash, at least you would expect the cross of trend. It didn't happen. Another clue that I saw was also the short-term correlation between bonds and stocks came from reasonably negative to 0, and then today we are positive, indicating that what triggered the previous sell-off was actually over. Another thing also that I saw, call me crazy, but I was checking all the stocks that usually crash during deflation, because people were calling deflation, right? And I was looking at Tesla, and actually Tesla was going bullish while people were talking about crash, which usually doesn't sound like the recession is around the corner. And one last clue I saw also was the fact that VIX rejected a trade. So this one I will talk about later when I arrive at the chart of VIX. Another thing that you could have noticed as well, if you went through markets in other countries, was the fact that, for example, Germany, so the DAX, was unable to break trend. It didn't even go there. The last time when we had the quick sell-off, you know, the Japan is down, it was down 12% at some point, etc. Now we didn't even have that. It exhibited the same pattern for matrix, no extreme volatility, started to roll over, and momentum is attempting to shift positive. Another one that I was watching also was the CAC. So while everything was going on, the CAC is actually slowly turning bullish trend. So it has been bearish trend for a while now. And on this sell-off, it tried to go, reclaim, and now it's actually attempting to get back to bullish trend. So I'm watching closely. Matrix seems to be shifting. Volatility is definitely down. I want to see trade continue to go down, and maybe I'm going to take a shot later on. The FTSE also didn't budge. No break of trend. Japan, the Nikkei, tested bearish trend for a day and reclaim it the next. Here, up, up. So you remember I drew these lines before. I expected a sell-off, retest of trend, and then back up, consolidation, and then the move back up, right? So same feature as for NQ, ES, DAX, CAC, FTSE. No extreme vola compared to when we had the sell-off the last time. So, I mean, from what I'm looking at in terms of equities, I mean, I told Vi before the show, I think it was a scam for people to actually buy for the next leg up. So if you didn't buy, I think maybe you will regret, but I guess there will be some more opportunities to add to the long equity trade. But like I said, it didn't look as bad as the last sell-off, and the momentum is already shifting. No trend were broken, and you actually see a lot of trend reclaim. While we are on equities, I'm going to go through the names that were problematic in the last show. So in the last show, I mentioned that I was a little bit concerned by the fact that Tesla, Google, Microsoft, and Amazon were bearish. Only Meta and Apple were bullish. And that was not very supportive for the market. And what happened, so for Tesla, actually during the sell-off, was Tesla went bullish. So Tesla went bullish trend. Then you have Google. I'm gonna activate also my buys because you guys need to see that. Okay, so Google is still bearish, but I got where is gonna come. Okay, you can see maybe here. I got 3 triggers to buy Google in a row. Same feature, look at volatility here, very extreme vola, here, nothing. So, I mean, if you are attempting to buy a dip and buying Google here, I mean, that would not shock me. If you are a dip buyer, that would not shock me. I have buys, volatility was not extreme. So I would not be surprised to see vola actually come down in the weeks that follow. So Google is still bearish. Microsoft went neutral, I believe. So this one I had a buy, I think on the 5th of August. Let's see. Yeah, I had buys here on the crazy sell-off, and we are making higher low and now higher highs. And trend, in my opinion, is about to flip. So same feature. Look, blue, nothing, just normal vola, nothing fancy, nothing crazy. So I would guess a lot of people actually bought there. Last one, Amazon. I know Amazon flipped, it's bullish now. So you can see here, it's bullish. So, and same feature, up, and you can see vola, lower high, lower lows. For me, it's indicative of what's to come. So this is for equities. So if you notice that, I would say that you were not really preoccupied by what was happening in equities. Now let's focus on the other assets. So I'm going to go to the dollar, the XY. Sorry, my computer is a little slow. Okay, so DXY was bearish. It's still bearish. Let's have a look. So dollar still bearish. We mentioned, I'm gonna zoom out. Okay. Yes, still bearish since it rejected trend on end of July. No change there. Volatility is still going higher. I mean, DXY dollar going down. I mean, how is it supportive for a recession already? Then we have VIX. So when we had the crazy sell-off and I started to buy the dip here, because it rejected the trade and trend. And here on the last, so when was it? 6th of September, 4th of September, VIX actually rejected trade. So if you notice this pattern, that's another clue that volatility was about to be to top and start to go down. Now let's go to CL because I know some people are actually buying oil currently. I think it's a good bet. I mean, I'm not surprised people are buying now. I actually got 2 buys to trigger. Okay, let me activate. it was oversold on the 10th of September, 11th of September, and you can see the small B with the stars here. I got 2 buys right at the bottom, 65, 66. So if you bought, I think it's a reasonable bet. The target would be between 72, 73, I would say. So I think it's a good bet. Ted will go over what he's thinking in relation to macro. I'm just trading what I see here. Okay, JC. So I mentioned here I was expecting a sell-off, and we got this insane sell-off back to trade. Oh my God, it was very scary. I know some people were actually shorting gold here and capitulated. So then you get the crazy move. So I started to buy at 25.20 here to add more. And now let's see. So the arrows you are seeing here was the forecast I did. I think it was like we were somewhere here. So 14th of August, that was a month ago. I said we would go to top of the range, then consolidation, then next leg up. So far, I mean, it seems to be materializing. Here, matrix is also moving. Here, we have momentum shifting. Positive, volatility is still going down. We are still not at what I mark as mean for daily. So I guess we get one last move up before maybe we get a decent sell-off to accumulate lower. So I would say I would expect gold to actually shoot up. And when you see, if you are using my volatility indicator that you get access from MFR, mark this level here. It's 1.9, I believe, 1.9. If you see trade arriving at 1.9, this is the time to start to unload some of your position because a sell-off will come. A more drastic sell-off will come. One that has started, so silver, I mentioned 1 month ago, 2 weeks ago, that I was looking for a retest of trade. So the retest happened. The problem was I couldn't add on the first retest because matrix was still going down. And for 6-7 days, it battled around trade, was unable to break. It held, so I bought at 28 and change. I bought, I did not expect this move plus 4%. I'll take it. I would expect volatility to go down. I want to see trade to go below trend and to start getting some real crazy action, maybe to the 32, maybe break the previous high here. That would not surprise me. So I bought, I will hold this one. I'm going to monitor, of course, what gold is doing. But if you listened and waited for retest of trade and you bought, you are already making money. So Bitcoin, I mentioned Bitcoin. So I got a trigger on my buy and sell. Here is my original script that was used to create the buy the dip script. So I mentioned on Friday that I got a buy. I was not buying because I was a little bit worried about how do you call this? High risk asset. Let's call it a high risk asset. So I decided not to buy. This weekend it triggered on Sunday to actually buy the dip script, the real one, the one you can get access to going to my profile. The issue is I didn't see it. Somebody sent me a message on Monday saying your buy the dip triggered. Thank you. Obviously, this guy bought it. So I guess he should have an average around 54,000, which is good. We are already at 58,000. If you look at volatility here, I would not be surprised to see volatility get into this area, so 6.6. So if you are long because of this script and you have access to my volatility script, I would mark 5.7, maybe 6 in this area. You know, the previous low you can see in the blue line here. I will mark this here. And once you see the volatility reach there, this is probably the top for the short-term bounce. For now, I'm not convinced. It's a longer term bounce. I want to see trade go below trend before I can make this assessment. Now I will conclude with yields. So my thesis was that yields would be stuck in a box. So I was a little bit surprised by this move here. I mean, retesting the lows, yes, it broke. But yeah, volatility is still increasing. MFR was crazy bullish on bonds. So yeah, 10 years, 30 years, they are all exhibiting the same pattern. So I was a bit surprised by the move, I would say. I didn't think they would break the box. But I'm still convinced that for now, the move is done, is over. If you are still holding pounds, I think maybe it's a little overdue. So I would not be surprised to see chop retest in the higher prices for bonds. So I use the 2-year, but yeah, 10 years, 30 year. I mean, sure, I know they are not the same, but it doesn't matter. Keep things simple. I also know some big accounts that usually nails the macro moves unloaded their long bonds yesterday. Okay, so I think I'm good. I shared what I was thinking. My conclusion is that I will actually buy on. I will try to add on any dip I get. I think we should be able to get a sell-off at FOMC, and I'm looking forward to this so that I can buy to my long equity bets. Thank you. You are silent, Vi. You're on mute. You're on mute, Vi, no? Ted, can you hear Vi?
No, I cannot hear Vi. I can hear you. Can you hear me?
Yeah, I can hear you, Ted.
Okay.
Okay, let's go. Sorry, guys.
I'll go.
Let's
If
go
you
to
want,
Ted.
I'll roll into my presentation now that I've
Let's
got everything
go.
dialed in. What happened is I had the market talk on YouTube, and it was delayed, and so I'm hearing the same thing that we're saying, like 20-second delay, and I'm like, what is going on? So
Okay.
anyway,
Yeah,
let me share.
I'm back, guys. Sorry, had the issues with earphones. Yeah, so I just wanted to say thanks, Raphael. Great insights, and I'm sure next week will show us the way. So, and for you, Ted, yeah, just how the macro situation changed and what to expect next week.
Yes, thank you. Let me share the screen here and sort of jump into what you're probably accustomed to hearing from me for a while now, but just touch on macro regime and some of the policy response, and then spend a little more time on positioning and market signals. I will say at the beginning of this presentation that I have been chopped up a bit in the equity market really since this ball event at the end of July, and the reverberations that we've seen over the past, say, 30 to 40 days, I think is kind of making its way through the market. And it's not seen it in my indicators yet, but I'm getting a sense that for what it's worth, that we are sort of at the end of a bond trade that Raphael mentioned, and maybe at the beginning of commodities resurgence. So we'll see. But here's what I'm seeing right now. My favorite macro service went to deflation today. They had been on a Goldilocks with deflation characteristics for probably the past 2 months. Today they hit deflation, and equities were reduced in their model portfolio. Just to touch on some of the things that have been happening, we projected last time what was going to be happening with PCE last time we met. Basically came out unchanged at 2.5%. We also got CPI this week, which has been, there's been event vol embedded in there, which has probably created some chop throughout. But what we did see is that headline CPI dropped to 2.5%, minus 4% from the previous month. That's a positive for the overall inflation rate. Core inflation, however, which is ex food and energy, remained flat on the month. And I think where the concern is starting to mount is on this month-over-month basis. We've had 3 months where on a month-over-month basis, core inflation has started to increase. So we were up 30 basis points month-over-month last month on core. So that's something to watch. Although we did get PPI today, producer pricing index, and that was certainly tame, which goes hand in hand with what we've seen in commodities, which may be finding a short-term bottom right now. We'll see. Unemployment rate, we saw that come down a little bit from 4.3% to 4.2%, but still sort of on this uptrend in terms of unemployment in the US. We've talked about the SOM rule. It remains triggered. So as you can see, going back 30 years, there's a pretty good recession indicator. Doesn't always work, but it's been pretty reliable. I watched a video right after the employment report last week. Claudia Sahm, who's the creator of the rule, was on. And if you remember with the July payrolls report in early August, she was saying, well, it's not really triggered. It's not a big deal. It's different factors. Last week, she was practically begging the Federal Reserve for a 50 basis point cut along with the rest of the market. From a GDP perspective, we've seen this thing chop around. This is the Atlanta Fed's GDP now. It's gone really from, the last several, since we last met, it's gone back to 2.5, down to 2, 2.1, back to 2.5 in the most recent meeting. So you have to look at that and say inflation's tame, but we've got some tick up around the margins. And we also have what appears to be GDP holding steady. So I have a hard time calling that a deflationary environment. Disinflation, sure. Stable growth, stable inflation could be a really good thing. Could be Goldilocks, could be a reflation trade kind of brewing. From a market reaction point of view, those that are buying Fed funds futures see still 75 to 100 basis points of cuts in 2024. Everybody agrees that it's 25 basis points next time, but there's some debate about after the election in the United States whether or not we go 50 or 25. And certainly by year end, we're seeing Fed funds rate down to 4.25 by 450. So that would be a 100 basis point move if that happens. This thing moves all over the place. We saw this at the end of last year too, and it seems to me like as soon as we start talking about Fed rate cuts, the market front runs everything, and by the time the actual event happens, it's over. So have to be mindful of that we may have seen the move in bonds at this point in time. I have my antenna up on that. My current market view is that volatility exists to take money from the weak and give it to the strong. My hands are weak. And so I've been giving some back during this sort of volatility phase. And a friend of mine on X says yesterday, the market's constantly humbling us. And he was referring to commodities because he's been a pretty big Canadian commodities bull with a Brazilian background. So he likes commodities. And I think this was right on the heels of that crude oil sell-off. We've talked about the dynamic positioning portfolio, which is sort of my primary framework. Systematic trend, it's updated weekly. I trade across full range of assets. Volatility adjusted position sizes. Stops are pretty tight, which hasn't served me well recently. And then I look at weekly reversal signals from extremes. Where I am from a portfolio point of view and where I've been since we last met here. Bonds have been constant pretty much in terms of the portfolio. Of course, they've been bullish. They've been trading right at the top of the range. It's been very small moves. Volatility's down. There's been no opportunity. I don't have 26%. And the reason I don't have 26% is because it's just right at the top of the range and I can't chase. So I'm probably at 22%. And in fact, today I trimmed my bond positions just because it's been up for a long time and seems like it's time to take some profits. Equity, I went back up to about 12%. I'm down to 7%, and in fact, I'm way less than that because my stops hit the end of last week. My stop methodology is to take 25% of my position off each day, as long as it's below my stop level, and then I keep taking it off. And I've taken off a lot of my equity exposure this week. It's been chopping me up. Commodities, light, alternatives, consistent, currencies, steady, but a different mix of commodities. Signal wise, US dollar still holding at 100, holding that 100 level. I think that's a level to watch. I think, as Raphael pointed out, if we're in sort of a deflation environment, you'd want to see the US dollar rally. Long bonds, sure, but they're overbought, and so not adding to positions. In fact, like I just mentioned, trimming some. Equities are chopping around. Yesterday, for example, we had the S&P down 1.5%, and then close up a percentage and a half. So we're chopping around, and it's been a little bit challenging for me. Continue to be long the steepener. I still think that plays out. Long gold. I've got my eye on commodities, and I remain bullish defensives. But if we start seeing some deterioration in defensives, which have held up really well all the way from July through August, then we need to be mindful of that, because that may be indicating the end of that sort of defensive deflationary trade. So let's just go to the charts and just start here with the dollar. I've gotten a series of buy-sell signals here as this thing has kind of chopped along the bottom. This is a weekly chart. It is something that is, sorry about that. It's not performing well today, obviously. I got long with my weekly signal on using UUP back on the 30th. I am still holding this position. I have a stop level. I think it's just below this level here. If I get stopped out, I get stopped out, but I am long that, still long that position based on that weekly alert. Yen continues to do its thing, continues to tick higher. I remain long yen. I added to the yen back on the 29th and 30th, still holding a position. Now, the Swissy, which has been a really good defensive trade as well, has started to, looks like it might signal at the end of this week that it's time to take some off. In fact, I added to my position right here at the middle of my range yesterday, and then I got a stop loss signal here, so I took 25% of the position off just after I increased the position. Now, the Aussie gave a sell signal a couple of weeks ago, so I took some off at that time. But it was still bullish trend. I added here and then took some. I got the sell, and so again, I'm getting chopped around in this sort of wider range, sort of higher volatility environment, and you can see the ATR here is right up at the top of what it's been. So the realized volatility remains high. Implied volatility follows realized. So it's just getting chopped around for me. Same exact situation with the Canadian dollar, which I've been long. Now I'm out. I got basically stopped out, bought here, stop, out. New position yesterday. I've been waiting on this position. I've had bullish signals on the pound for a long time. I finally had a spot where I could get long, pulled back to the middle of the range, took a position, closed up today, which is nice to see. I like to see a position work pretty quickly, particularly if I'm going to add, but I went in with my whole position that was indicated at one time. I'm not averaging in, I'm just in. So stop will be set somewhere probably down around here. Then FXE was another one. I got long that today near the open. This was another one that I've been waiting for it to kind of find a spot to reverse. So I did hit the button today and got a pretty full position on the euro via FXE. So this is the one. It's like awesome on Twitter. It's like I posted on Wednesday when the thing crashed. It's like, look at this thing. It's like, this is the economy great? No, like permission to fade for a trade for sure. So basically, I think that was the low in the position. Since then, this is USO. You can see that I've got the makings of a buy alert. This does not. It's not a buy alert until the end of the week. So I really wait until 3 o'clock on Friday afternoon if I'm going to buy USO, or probably buy USO in my trading account, and I'll buy PDBC, which is my commodity exposure for my other account. Is probably where I'll go with that. If it holds, and of course I'll be buying if I buy at this level. I'm certainly not buying the low. I'm not, but I'm getting a position, starting a position in the event that it reverses. Still very high realized vol in USO, but both implied and realized have started to, or at least implied has started to come down last couple of days. XLE, which is, basically fell out of bed. It was a position I had on a couple of weeks ago, got stopped out. This is my trend level. It's starting to behave as you would expect with a 2-day run in oil. I'm not interested in this right now, but it's certainly bearish and looks like it could be very oversold along with oil. INFL, which is a position I've had on for quite a long time, finally got smacked out of this position this week. So the inflation trade took a beating. Of course, as soon as I'm out, I got in way back here, but I got, I'm out now. And so just the stop level hit, 4 days, done. TLT, this one's been back and forth, still very bullish. But I had some signals on the weekly chart. I was looking at that. I cut my position at the end of, I can't remember, it was the 30th. Cut that position in half because based on that sell signal, which of course was immediately reversed the following week. I did take some off today and trimmed all of my bond exposure by about 10%. So I brought that position down. It looks to me like we might be sort of at an inflection point. I'm still ostensibly long, will remain long until I get stopped out, but it made sense to take some profits here. Whoops. Continue to like emerging market bonds. It has continued to do well, simply holding the position. I've not added. It's a full position for me, so it's just chugs away, kicks out about a 5.5% yield for a guy that's close to retirement. Not bad to have the income generation as well. As far as my steepener play, I've been playing the steepener, which I'm expecting will be a bull steepener, meaning the short end comes down. Hasn't really yet. I mean, the 2-year has, but 3-month bills are still over 5. Fed starts cutting next week, so that steepener play should work. It's something where I've been adding to the position. It hasn't given me many opportunities. I added here, but the volatility's come down in this, so my system has me adding more to the position. So hopeful that this works. Big volume today. Not sure what's behind that, but always paying attention, always have risk management in place. Risk management's critical. TUA, which is the 2-year leveraged and gives you, it's been, this thing has been a much bigger position for me than TLT. It has lower volatility characteristics and has returned about the same amount, a little less than TLT. It has been something that I added to the position, just holding. And my system wants me to buy some, but I just cannot buy at the top of the range. I'd like to see this come down some before I add to the position. I still have room to add to that. I don't know if we're at the end of the bond run or not. Certainly the market is giving pause. Gold. Raphael touched on it. Well said. I always, since we started talking about gold more actively in the last four sessions we've had. I bought some here right after we met. This was for September, and I sold the addition that I had. This is a core position for me, been a core position for a long time. But I did take some off today as it really popped. And I think Raphael alluded to that, you know, as the volatility starts to go up, you want to be kind of lessening your position and hoping for a pullback to get to add at a lower price. Another position I added a couple of weeks ago is CTA, which is managed futures strategy. Ostensibly, this should work well with commodities. Gave me a buy signal on the weekly. It's chopped around. I bought here. I'm break even, maybe slightly underwater on this position. It's neutral trend. But if this commodity starts to go again, and the dollar starts to move again, this could work well. VIX, I'm not going to talk about VIX, but SPY has just given me no end of anguish, just in terms of sell signal here, which kept me out of trouble. This was before the havoc raised at the end of July. I missed this whole move up. I started to get long as it pulled back into the middle of the range, and then I got a sell signal last week, and now that's been neutralized this week as well. So I added here. I told you guys that last time. I added here as it came back to the middle of the range. I started to get my stop out signal, which is really based on this first position here. It only remained in stop territory for 2 days. This is my stop alert, and you can see I'm back above my stop level. So I am still have a small position in SPY, but it has not. I was not so fortunate with the Qs, which I also had on. EFA, which is developed markets. This has been same situation. Got long this one. This one gave me a buy signal the week of the 5th, which was great. I did have some equity exposure. I tried to add here at the middle of the range. It started to stop me out along with the other things. So this is what I've been talking about. This sort of chop has caused me to cut position. I still have a position in EFA, but it's been reduced as a result of 3 days of pain. Fez, same thing. That's European stock 50, same scenario. I think I'm out of that position. Just to finish up here, I mentioned defensives. The defensive sectors and factors have worked really well during this entire period. I mean, it ran up through July. Yeah, we had a pullback at in August, but nothing like what we saw in the major indices, nothing like what we saw in tech. So this is important to follow, because if in fact we've reached the end of this sort of bond move, maybe commodities start to come back in, we are going to see money come out of these positions. I think money's been hiding here. I have a position in SPHD. I am mindful of what could be happening right now, and same with, you know, low volatility SPLV, still hanging on, but underperforming tech now, which has not been the case for a period of time. Same with staples, same with real estate, XLRE, same with utilities. Just, you know, these things give you no opportunity to get in. I mean, if you hate chasing like I hate chasing, it is super hard to get a long position here. And so, yeah, you were quick on your feet. You might have been able to get one here, but I've just not been able to get a position here at all. I did, however, had an opportunity with XLV. I bought a position here. I actually, this was in my trading account. I went long the 155 by 158 call spread, November expiration, and was cooking right along until yesterday. My stop level was just below here. I'm out. Of course, it reverses on me. So this is just the way of the way things happen. I follow my system. I have no problem taking losses, small losses. I just go with the system. And again, like I said, I've been chopped up a bit. So that's where I am.
Thanks, Ted. Always appreciate your talks about risk management, which is very, very important. So yeah, My piece today will be pretty short because I have this rule that I don't trade during rollover week. Rollover week causes a lot of random movements, and there are still 2 million contracts of open interest in ES that needs to roll over, which of course the major action will happen on Monday most likely, but today and tomorrow today we already saw, and tomorrow we will also see for sure some action which is caused basically only by a rollover. So I want to share my screen. Yeah, sharing screen. So first of all, what I see in the sectors, the only sector that I really like still, no surprises here, is the XLU. And I wanted to touch on that I still like it. It's the strongest sector based on my momentum scores and also the overall trend strength. From all S&P 500 sectors, XLU is looking the best. Like Ted said, it's really hard to get in if you don't have a position, but for those who do, I see no strong reasons to start selling. The only thing that I see with XLU is that we are approaching again, we are approaching the top of the regular term range, but if you have a position deep in profit, there is no reason to panic about that. And maybe, just maybe, the fact that it's close to top of the range, it will give us a chance to add to this position. Maybe, I hope so. But again, most likely not next week. Because of the rollover thing, and also, of course, not before the Fed meeting, because I need to see not necessarily the fact of a rate cut or whatever. I just want to see the market reaction to things. So with correlations, actually, we are in absolutely normal territory. Absolutely normal. Regular sector correlations at 0.6 or 0.7 are considered normal. So this is how they look on a 10-day basis. And if we go to a 30-day basis, then you will be able to see that correlations were up. No surprise, because all this period, of course, had August included, and still for now 30 days include a very big part of August, so that's no surprise, but they are turning down, and we have never seen such drastic levels like the ones we saw here or here. So I see no big red flags, and for me not to change the time frames all the time, it will be easier for you just to see here that I mean, currently doesn't matter what time frame you are looking at. Average sector correlations, they are ranging from 60 to 70. 60 is a very calm and normal regime, and 70 is on the higher side. Again, this blue line was because we had some action, but yeah, average correlations must always be positive. It's very bad when they are above 0.8 or even worse 0.9, but these levels are totally fine. Now with stock bond correlation, Raphael was talking about that. So I he touched on 5-day correlations, I believe, that they are positive, which is true, and it's a good sign because sometimes these short-term correlations front run and show what will happen in the longer-term correlation. So that would be good. But for now, because I always start with 10-day correlations, I don't see any drastic changes in stock bond correlation. So yeah, it's quite. It was quite negative, and we'll see where we will go from here. What is a good sign that dollar calmed down? Dollar basically stopped doing what it was doing for the last weeks and even more. So again, I can't be bearish. Now it doesn't matter that I will not trade. I can't be bearish. Nothing in my process is signaling that we are in a big risk of a sell-off. Of course, market will to tell us all to hold its beer, and the next week it will show what it wants to do. But uh, but for now, the only difference, I completely agree with what was said today during the show. But the only difference that is still here, and I will repeat the same thing over and over, that Raphael today said that yes, and NQ is signaling the same thing, which for me is kind of hard to agree. And the only reason is because of these levels. So, okay, so XLU is what I like. Second, by the way, second strongest is XLP by momentum. And I always tend to buy trade with the momentum. Otherwise, it's very hard. So XLP. Other sectors, I have nothing to say. They look not so good at all. So NQ had this nice rally this week. But if you remember when I was talking about this 19747 level, so not surprisingly, we are still not there. So again, what is missing for me to say that, okay, now NQ is also ready, is a strong close for at least a couple of days above 747. One day can cause a rally too, but I mean, yes, when it reclaimed 5471, both the last time and yesterday, what it had, it never looked back. It just reclaimed and it went. And Q doesn't want, and no surprise. Even though individual stocks in tech now had this pretty significant rally, and Q doesn't look that good. NQ doesn't look that good, but most likely we will see NQ. We need to refresh the signals and also see tomorrow's action. But NQ will reclaim bullish trend, or maybe even is about to reclaim bullish trend. So that's a good thing. But the level is 747. So for me to say that all equities now are signaling very bullish momentum, the only thing that is missing is the 747 in NQ. Now, if you are monitoring futures also, if you are monitoring futures on MFR or using our trading view script or so, these are end of day. This is end of day data using yesterday's data. So for tomorrow, for today. So of course today already ended, but we saw that for today, CL had this upside downside ratio of 2.2, and even long-term ratio was 1.99. So knowing that it was signaling bearish trend, what it at least should have signaled is to get rid of those shorts, or get rid of the majority of those shorts, because if you are short something and you see upside downside ratios like this, well, maybe it's time to rethink your risk management strategy. So of course I was not long, I was not trading all today, but I just wanted to encourage people to take a look and to monitor, because same with USO. If you are not following, if you're not trading futures, you can use the USO. Upside downside ratios are very similar to that. And yeah, so for example, for ES, the top on the range was 5642. We only went slightly above 5600 and then came back. But NQ almost did what it wanted to do. NQ was 506 and the high was 480 or something like that. So it was way closer. But still, like I said, NQ will when NQ prints bullish trend and reclaims 747, then I will be long with way more conviction in my trading. Same. So yeah, next week will be really important, and we will have. I'm almost sure that we will have volatility spikes to both sides, and some of these spikes will look like they are coming out of nowhere. And why I'm saying that, because that's what happens every rollover. Every rollover, because a lot of capital needs to flow, and that's why I never touch uh, futures or index ETFs, or let's call it beta, during rollover periods, because that rollover period causes a lot of trouble. And doesn't matter whether you are long or short, you don't want to experience these random spikes coming out of nowhere. And of course, that I will be excited to see market reaction. Uh, I usually don't listen to what Powell says or what the data what interest rates are, or so. I just know that there is important uh, economic release, so I watch the market action, and then I redo my targets and my plan based on that. But yeah, what I wanted to stress is that as always, manage risk, but keep in mind, because I rarely talk about that. Of course, about risk management and news I talk, and don't not trading during news I talk all the time, but I don't remember if I ever touched on a rollover. Keep in mind that if you see those flows to one side or the other out of nowhere, this is the reason. So yeah, and also let's see how XLU will hold, because that's my only holding, XLU and SPY Iron Condor. But SPY Iron Condor will expire next Friday, so let's see how it goes. That's it from me.
Quick side note on USO, we have a cap on the downside.
Yes.
And another side note,
another important thing, yes.
Yeah.
Correct.
Another side note also regarding TED with the guys for macro who said deflation. The guys I follow for macro, they're actually battling about Goldilocks and deflation for probably, I'd say, a month and a half. You know, it's pretty wild to make an opinion currently. I mean, the battle is on, and apparently it's still not resolved.
Yeah.
This gentleman has had the Goldilocks with deflation characteristics for probably 2 months now. And today was the first day, and he was waiting for the sum of markets to reach 50% of one of those or the other. And apparently it hit 50% deflation today. So I don't know. We'll see.
Yeah, it's very, very tough environment.
Oh yeah, we'll see, because there is this joke, but it's very true. When some people complain that some economic numbers or data is being leaked or whatever, I can tell only one thing, that if Powell or BLS or whatever, it can be NFP number, interest rate, whatever, gave you or me or anyone the number in advance, no one would know how market will react to it. Just keep that in mind. And good number, bad number, beat, miss, lowering rates, lowering by little, lowering by a lot, no one knows what market will do during this event. So best is not trying to front run the numbers. Number will be released, market will do its thing during the release and press conference, and after that, just take a look what market did. Market then will tell you the real situation. So yeah, don't try to front run the numbers, because I only agree about these people who still have no bonds but want to buy. I also think that this move now needs to come down a little because bonds are overbought. But when we are coming to the next week, yeah, just don't try to front run the thing because whatever the number will be, no one knows where the market will go. Yeah.
I
Good
wonder
point.
who is complaining about clicks.
I don't know, but I saw on Twitter that sometimes people think that the problem is that the number was leaked. Well, I know one thing that the majority of traders, if they had a number in advance, they would not be able to guess that the market will go up or down. It's just true.
And
It's just the
apparently the
truth.
plunge protection team was buying dollars. And I'm, what?
Yeah,
Plunge
true.
protection teams buying dollars? Why would they do that? Makes no sense. Anyhow,
Oh yeah, true.
Yeah, people who can't trade will find any excuse.
mhm.
Oh, man.
I saw on Twitter today one very interesting character called ICT, the guy who was talking that he was kidnapped by market makers who told him all the secrets. Anyway, doesn't matter. But basically, he tried to live stream his trades, and whenever his stops were hit, he was complaining that market makers are coming for his stops. So yeah, don't do that, and don't try to predict the front run the market. Yeah, I think that on this positive note we can finish this, unless we have some questions.
No, I looked, but no questions. Nothing.
Yeah.
Okay, guys. So let's see. Tomorrow will be interesting, and we meet up in 2 weeks.
Yeah, we
Yeah,
got
and
OPEX coming up too, as well as futures rollover. We got a big OPEX
oh yeah,
coming for with
rollover and
OPEX.
OPEX. So keep
Yeah.
that in mind. That next week is not only Fed meeting. Because no, Fed meeting is not entire week, but entire week is a rollover. And rollover price action during rollover is always crazy, always.
Yeah,
Yeah.
expiration,
So
OPEX, and
yeah,
futures roll. Sounds like a good week.
good, interesting week. I'm excited
Probably
for
just
that.
as well. I'm sitting in a lot of cash.
Yeah, it's always good, and yeah, I still have my most of my margin in bills and have no plans to uh, close them. Most likely will hold to maturity because, again, like I said, I converted my cash into bills at the point where it looked good to me, but the main reason was just because I can use it for my futures trading. So yeah, I will not try to do anything with it, but yeah, no changes. If someone was wondering, no changes. My majority of my free margin in my trading accounts is in bills. Yeah, so okay, so yeah, good that we had this positive ending, and thanks Raphael, thanks Ted. Good luck everyone next week. Roll over, Fed meeting. Don't try to be a hero, and it's better to wait for market to do its thing, and then you will be able to decide. So yeah, and see you in 2 weeks, and maybe we will do a ticker show next week also.
Yeah, we will.
Yeah, thanks everyone. Bye.
Thank you, guys. See you.
Thank you.